A woman writing under the pseudonym The Duchess is credited in 1878 with coining the phrase that beauty is in the eye of the beholder. I think the same might be said of good investment performance being in the eye of the investor. Has this been a worrying or boring month in investment markets? The debt ceiling debate is ongoing. The negotiators did take a pause on Friday with no restart time announced. I suppose that could be read as dire news. In addition, recession fears continue to gather headlines, and there are still questions being raised by some about the stability of certain regional banks. But what about what's happening in markets themselves, the place where our dollars are invested? Has it been a volatile past 4 weeks reflecting the narrative in the news media, or really something else? Take a look at these two charts. They both show the relative performance of specific investment funds over the past month. It appears that the ones on the left have experienced a lot of volatility, perhaps reflecting the mood of investors. However, the investments on the right, they seem to consist of markets that have been largely unaffected by recent news events, where investors had a more boring, but perhaps a more pleasant or at least a less stressful experience. But these charts are actually of the very same investments for the very same time period. So how can that be? Well, it has to do with something called framing. The volatile chart on the left measures the daily percentage change in the price of an exchange-traded fund replicating a broad market index. How much more or less in percentage terms the fund was worth from one day to the next corresponds with what the U.S. stock market or bond market or foreign stock market did that day. The calm-looking chart on the right measures the daily change in price of those same exchange-traded funds. How much more or less in dollar terms versus percentage terms were the share prices from one day to the next. Exact same funds, exact same time periods, yet two very different pictures of investor experience. It's generally understood that the media's number one goal is to draw as much attention as possible to itself and what it's saying. Now, in order to do that, the people who construct charts, write headlines, and choose what to report on will try to make their story as dramatic as possible. It's well documented that storylines that create fear, anxiety, or controversy work best to attract our attention, which is why we often see data presented in its most volatile format, in this case showing percentage changes instead of dollar changes. If you Google search on framing theory, you'll get over 79 million results. Obviously a popular topic and one that relates directly to the two charts that we've been looking at. The communication theory around framing suggests that how something is presented to the audience, called the frame, influences the choices people make about how to process that information and ultimately how to act. For investors, a key to good investment behavior and experience comes from recognizing the framing that any information is presented to you with. Often the media's framing will cater to an emotional trigger, things like fear, sometimes greed. The framing being employed is there to get you to feel something so that you will be more likely to do something. The question you have to ask yourself is whether today is so different from yesterday that it requires action, or is the latest framing of the daily news cycle really the only difference, the left chart or the right chart? The well-prepared investor already has their financial plan and portfolio situated so that there's enough income and short-term reserves to support years of lifestyle spending. The current debt ceiling debate will be long over before these reserves would ever be depleted. This is called the margin of safety, kind of a lifeboat. These investors also own a wide variety of long-term growth investments so that they aren't relying on any single company or market to come through for them. They're diversified. Keeping your head when everyone else appears to be losing theirs may have a lot to do with staying skeptical of the urgent or anxiety-producing framing of the current 24-hour or maybe even 24-day news cycle. Well, we hope this has been helpful as you think about how you invest your dollars. And if you have questions you'd like to see us address here on Financial Perspectives, you can contact us, the information that you see on your screen. Thanks for watching today. We hope to see you in a couple weeks. And until then, be well.